In business news tonight, the Central Bank of Sri Lanka says that in a backdrop where inflation and interest rates are maintained at a lower rate, banks need to take measures to provide long-standing loans. Assistant Governor of the Central Bank, C.J.P. Siriwardana, made this comment to Newsfirst.
On a number of occasions in December 2012, the Central Bank of Sri Lanka decided to lower its policy interest rate with the aim of maintaining an easy monetary policy. In addition, the statutory reserve requirement to be placed with the CBSL by commercial banks was also lowered from 8% to 6%. The Central Bank of Sri Lanka says that over the past 1 year, the normal loan interest rate, which was at 16.36%, was reduced to 14.44%.
The Central Bank since December 2012, following an ease monetary policy, there we have reduced our policy interest rate, especially the standing deposit facility rate and the standing lending facility rate by about 120 basis point to 175 basis point. We reduced the statutory reserve requirement, SRR rate, by 200 basis point from 8% to 6%. So that's the easy monetary policy adapted during the last 17 months period. With that reduction of the monetary policy interest rate at the central bank, we have seen the interest rate adjustment, downward adjustment in the market. But one thing what we have observed is that there is the similar corresponding reduction in the longer term lending rate in the banking system. So therefore, our request to the bank is that there is a room for the further reduction to reduce their longer term lending rate and giving that facility to the investors and encourage the investor to borrow from the banking system.